Let's talk about a different kind of investing. This isn't about watching charts all day, trying to time the market, or panicking over a 10% drop. This is about making the decision to own a piece of a world-changing business and then having the patience to let that business grow for years, even decades. You're not here to gamble on Amazon's stock price next week. You're here to become a part owner of Amazon for the long run. But how do you actually do that? How do you build a position that you can confidently hold through recessions, through market crashes, and through all the scary headlines that will inevitably come? The strategy for long-term wealth building is fundamentally different from short-term trading. It requires a different mindset, a different set of tools, and a tremendous amount of emotional discipline. This video is your blueprint. We are going to build your long-term Amazon investment strategy from the ground up. I'll show you how to analyze the company not as a ticker symbol but as a business, how to use time as your greatest ally, and how to build the mental fortitude to stay the course when everyone else is losing their minds. The very first step in long-term investing is to shift your identity from a trader to an owner. A trader cares about price movements. An owner cares about the health and growth of the underlying business. So, before you spend a single dollar, you need to understand what business you're actually buying. Amazon is no longer just an online bookstore or even just an e-commerce giant. It's a collection of three massive, high-growth engines. First, you have its North American and international e-commerce. This is the retail backbone, but it's a low-margin business. The real profit powerhouses are the other two. The second engine is Amazon Web Services. Oz is the leader in cloud computing. It provides the infrastructure for a huge portion of the internet, from Netflix to your favorite mobile app. Oz is incredibly profitable and funds a lot of Amazon's other innovations. The third engine is advertising. Amazon has a massive, intent-driven advertising business. When someone searches for a product on Amazon, they are moments away from a purchase, making that ad space incredibly valuable. As a long-term investor, you're betting on the continued dominance and growth of all three of these pillars. You're asking questions like, will AWS continue to lead the cloud race? Will advertising revenue keep growing? Is there a potential for a fourth pillar, like healthcare or autonomous vehicles? This is the analysis of a business owner. Now, let's talk about the single most powerful tactic for the long-term investor: dollar cost averaging. Trying to time the market is a fool's errand, even for professionals. Instead of saving up a lump sum and worrying about whether today is the perfect day to buy, you implement a plan of consistent, periodic investments. This means you set up an automatic transfer to buy a fixed dollar amount of Amazon stock every single month, or every single quarter. For example, you invest $200 into Amazon on the 1st of every month, no matter what the price is. Why is this so brilliant? Because it automates the process of buying low. When the price of Amazon is down, your $200 buys more shares. When the price is high, it buys fewer shares. Over time, this averages out your cost basis and completely removes the emotion and stress of trying to pick the bottom. You are not betting on a single point in time. You are building a position across the entire market cycle. For the long-term investor, dollar cost averaging is the ultimate wealth-building machine because it harnesses volatility. Instead of fearing it, you've started building your position, but the real test of a long-term investor is what you do when things get scary. And they will get scary. The stock market is guaranteed to have corrections, bear markets, and periods where it feels like the world is ending. Amazon stock will, without a doubt, experience multiple drops of 20, 30, or even 50% during your holding period. This is not a possibility, it is a certainty. Your success will be determined by your psychological preparation for these moments. When the price is plummeting and the financial news is filled with panic, your instinct will be to sell to stop the pain. This is the worst thing you can do. You must remember your owner mindset. Did the reasons you invested in Amazon change? Is Oz still the cloud leader? Are people still buying things online? If the fundamental business thesis is intact, then a falling stock price is a sale on the business, not a reason to abandon it. In fact, these are the periods when your scheduled dollar cost averaging is working hardest for you, buying more shares at a discount. The long-term investor learns to be greedy when others are fearful. A truly long-term mindset also means thinking in terms of decades, not years. The magic ingredient that makes long-term investing so powerful is compounding. This is the process where your investment earnings generate their own earnings. It's not just linear growth. It's exponential growth. A company like Amazon reinvests its profits back into the business to fuel further growth. This is compounding at work within the company itself. As a shareholder, you benefit from this. Your job is to simply stay invested and let that compounding engine do its work. This means you must invest with money you truly will not need for a very long time. This should be capital that is separate from your emergency fund, your house down payment savings, or your next vacation fund. By using a set it and forget it approach with dollar cost averaging, you avoid the temptation to tap into this investment for short-term needs. You are planting a tree that you have no intention of cutting down for decades, allowing its roots to grow deep and its branches to reach the sky. Before we finish, I have to end with a crucial disclaimer. I am not a licensed financial advisor, and this is not financial advice. Investing in individual stocks like Amazon carries significant risk. While it has a strong historical performance, there is no guarantee of future results. The company could face increased competition, regulatory challenges, or technological disruption that impacts its business. You could lose some or all of your invested capital. You must do your own thorough research and consider your personal financial situation and risk tolerance. A diversified portfolio is always recommended to manage risk. Your call to action is this: define your long-term strategy today. Decide on an amount you can consistently invest every month without it impacting your lifestyle. Then, open a brokerage account that allows for automatic investments and fractional shares, and set up that recurring buy for Amazon. The best time to start was yesterday. The second best time is now. Thanks for watching.